All right, welcome to the post-Bitcoin ETF world. And what has been a long week of recording content for me. So this video is almost celebratory in nature because it's the last video that I need to record for like 72 hours. That's going to be a welcome break from what I've been doing recently. And with that said, if you're viewing this video any later than tonight, Sunday, tonight's not very helpful. Sunday, then the foundation is now alive. Please head over to the link on my Twitter to access the foundation. If you're seeing this tonight and haven't yet pre-ordered, please go ahead and do that. Been a lot of recording gone into it. But here we are. A view on the charts and the thoughts and the questions of Twitter. Now, when it comes to BTC, I think that the action post BTC is it's to be expected. I think really, if we take a look at kind of the lower time frame price action that we saw the ETF spike, and we saw the kind of euphoria and overly bullish emotions grip the market basically at this high. I saw people talking about like unfollow everybody who said it was a sell the news event, and people memeing and trying to dunk on people who said it was a sell the news, literally for the end of that day to be red and us to be trading significantly lower over the course of like 4 days since. We're down 14% from the high now. So there was a real climax of emotion up here based on the fact that we'd seen lots of positivity shared about early uptake numbers, early volume in ETF, and then we've started to see a more aggressive downside move as a result of that price action since. And I don't think we're going to stop here. I don't think this is the place that BTC is going to find its resting point. I think that it's probably going to end up trading lower down, and we start looking at potential zones or regions of attack from here. And we know that obviously this area here is number one, and then number two is this area here. And then we know we've got the big level at 31,000, which is the monthly zone. So really, that's the only consideration that I have in mind now. If BTC makes it all the way down to here, I will be in my element that is going to happen. But we'll take things step by step. This is still an uptrending market. This is a market that's still aggressive to the upside. And therefore, I think we've just got to be a little bit cautious when we don't kind of take on the emotions that the euphoria that was present in the kind of the bulls at the top. Make sure that we don't get kind of too excited about downside price action when we've seen a couple of red days on BTC. The other concern really is kind of the presence now of the divergence. So we've got the bearish divergence here and here, and then we've got the bearish divergence on the AO here and here. And actually there's some similarities in this region to the way that we'd stacked up previously, most notably in the awesome oscillator through this zone here. Not quite for the RSI, but from the AO, we've got a nice similar divergence through this set of highs here. We had the large rejection on the 3-day. We took a bounce, and then we just grinded down until eventually fresh highs and this horrible period of price action that we had through here. So I think this divergence is significant for us now. It's the first time that we're really starting to see those 3-day, the higher time frame, the greater or more significant bearish divergences present, especially in an uptrending market. We want to see higher time frame divergences to feel more confident in the fact that we may see a play out from them. I think also notably the fact that other markets have also hit into their resistance points. ETH made it all the way up into 2,700, which is the monthly resistance point for it and kind of the area for taking profit on any positions. And so for me, I think the environment right now is a lot more muddled than it has been. I think there are significant signs there that the market will pull back lower than it has done at this point already. And I think, if we look at traditional markets in terms of stocks and crypto stocks, then I think they're also in a very similar position. They're kind of in zones that should be holding, but we may also get some chop and some consolidation on those. The best situation that we can have for BTC is just another ranging period, which will allow some of the alts to continue moving into playing, and hopefully for ETH to expand past 2,700 and get through that monthly resistance much in the same way that BTC did. That would be the hope. But like I said, I think that this is probably the top for a little bit of time now for BTC. Allow the market to cool off, correct, move lower ideally, and then establish itself and get ready for another drive towards highs. And then once that move happens, then I'm sure the next discussions will be all-time highs from there. So as it stands, I think any movement lower is opportunity. Still looking towards that monthly level at 31,000 seems out of the question at the moment, but I still believe that that is very much on the cards in terms of a sell-off that we could see on this region. I think it would be a huge opportunity if BTC were to come back down to that 31,000 level as well. Then when it comes to other markets, had a few kind of like suggestions in the comments for what I should look at. One of those was FET, and I think FET is, again, doing an okay job up here. We've obviously got some significance above 70 cents that the market doesn't seem to like it above there. Been trading above that level for like 5 weeks and failing to stick it. And again, looks like a market that probably is going to trade lower in the short term. Now, depending on how that situation develops for alts with BTC, I think if we see a more controlled sell-off, something that isn't so aggressive with huge red candles, then it's more likely that alts will have that independence in order to be able to move and continue in their own bubble. If BTC starts selling off aggressively, everything is going to be impacted by the aggression of that selling. So that's the thing to look out for. We've got a holiday on Monday, so it's going to be Tuesday really that the volume starts to come back in and where our interest is going to be peaked again in terms of the direction of BTC, or at least some early indication of what the selling pressure is going to look like on BTC. So FET, I think, is an alt market which is doing its consolidation, doing its chop, is going to be largely dependent now on BTC. If BTC gives it some grace, then FET probably looks good here, but 70 and above 70 is where we want to stick, given the resilience we've seen of bears around that level and certainly active sellers. And then we've got kind of like ETH beta plays, and so when we've seen the move higher on ETH through here and a breakout of the consolidation, ETH is still in a good spot here, just simply doing that, consolidating up here after a very strong few days into last week. And now just doing the consolidation around this area here. If we start moving back towards the 2400 dip and underneath that, then I think that's a good opportunity to buy. And what we don't want to see, I think this is a 4-hour level here. Yeah, it's probably worth keeping as a 4-hour level. And I think what we don't want to see through here is ETH dipping back below this. So I think closes back under 2400 are a potential worry point for ETH and something that we wouldn't want to see. So stick above that 2400. Good for continuation, good for alts to continue running, good environment for us to still actively trade in. I actually think that this is an environment that is better suited to trading than it is to thinking about spot buys. I think spot buys are still at an awkward point given the extension of some of the rallies and the lack of any meaningful corrections, and therefore I think that actively trading this is actually a better solution for a lot of people. I think if you can, get the right parameters around your trade, identify the right markets, then I think the trading angle is probably best suited for the environment that we're currently in versus looking at being a fresh spot buyer just yet. I think we've got a little bit more time to wait until we get better value for the spot buys. So trading market, yes, still take advantage of those moves to the upside. Spot buy market, not necessarily. I think we get increased value if we just hang on and wait for a little bit of time through this zone. And then what else did we get? Let's take a look at what else, if we got anything else in terms of the discussion points. Some stock stuff. I know Nvidia was mentioned, but Nvidia is just breaking out of consolidation to the upside. So again, we would just consider that in the in like this vein where we'd had consolidation on the higher time frames for Nvidia and we broke out. So it looks good for continuation. Drop back inside the range, just like ETH, then we've got a problem. I think that's the best way of looking at this. We got a couple of markets that are in pretty good shape from the higher time frame, and again, look as though they could continue should the market allow that situation. One of those is Blur. I think Blur is trading now nicely outside of its support resistance chop range through here. So we want to see 53 supported, and if that is, then we're looking towards 70 as a take profit point for that. I think again, this still makes a good trade, even if you're late to this one, not even late, even if you're looking for opportunity for this, 53. 71, you're looking for a trade that looks like this, right? So it's a good setup still. So plenty of markets out there that still look as though they've got the potential to run. WIV is another one. Tron actually looks like quite an attractive market at this moment in time. TIA, we know from the discussions of trend consolidate trend that this market is strong right now. Perfect bounce off the top of this level as well. Sol potentially starting to get some strength. Certainly looks good on the correction front. So this trend line is continuing to support. We got problems if this trend line goes. Maybe it might be like one of those bull market fakes to the downside and immediately recovers. But this is a good correction, because what this is doing is this is bringing everything back down, cooling everything off, and not being super aggressive in terms of the price action. We like to see things that are doing the correction steadily. They tend to give us a little bit more confidence in holding through, certainly from a spot perspective. And then for opportunity in terms of actively trading the market, it's also a bit more pleasant to be able to just watch this consolidation and to identify when it's come to an end in terms of the strength we should see from any breakout candle. Looks as though maybe that was on the cards today, but a poor reaction in the 4 hours since this larger move through the 100 zone again. So I think just back into that consolidation chop mindset. But really, you know, if you're marking this on a diagonal and just looking for any strength that's going to close outside of the boundaries it's been incapable of doing so previously, that's what you're looking for a nice simple entry trigger into Sol in a more active trade basis. Apart from that, overall, I just think the market is in an awkward position. If we just quickly go across and look at the traditional market as well, we'll take a look at the NASDAQ here. I think the NASDAQ is in a really good point. I've always said I don't see how this fails to push 17,000. We've got up like literally to like 40 cents over it. And I just can't see a world in which this doesn't end up running 17,000 significantly before any larger downside move. And I think all of the time frames from an RSI perspective set up really, really well for that continued push. We'd had a few days of selling off after Christmas. Basically, we'd moved quite high over the Christmas period, and then we had the one correction candle that kind of wiped everything out. And we've recovered really, really well in those 6 days since. This market has been very strong back to the upside and undoing that downside move, which we would expect in this trend. So I think the NASDAQ looks as though it's going to end up trading higher. And you can see here the weekly close is actually really good for the NASDAQ as well. There's a couple of markets that I think look a little bit weaker on this side of things. I think one of those is AI. So I think AI just looks as though this is going to end up rolling over here. You can see the way that this consolidation is taking place, and you can see basically 23 is an attractive level to run. And then 20 is the big region down here in terms of a support level. So I think this low goes. I think they're going to end up running this. And I think somewhere in this zone here is going to be the opportunity to be a buyer. But AI to me looks like a market that seems primed for lower. You can see like rolling over on the RSI on the 3-day, rolling over now on the daily, pushing down to levels that it hasn't been in a significant length of time, all the way back to October before we got back down to these sort of levels on RSI. So there is definitely the presence of bearish strength here. And so, you know, I think probably lower for this. And then the other one is PLTR. And PLTR is a really lovely trade, very simple trade. Same basis as AI. This is the important level here around 1360. Nice level to try and move below and sweep everything out through here. And right now we're caught underneath this former support level. So if we head down to the 4 hour, you can see a really good interaction with the market here around this level. So we know that previously 1710 has been this kind of support region for the consolidation. This right now just looks like a bearish retest into 1710, and we're looking for a breakdown and then movement towards this 13. So they're kind of my hedge puts at the moment. I think that those two markets look particularly weak, or at least particularly simple to execute short side setups on. And then we've got other markets that are actually in pretty good shape. And you know, we were just discussing NVIDIA, but that's certainly one of those markets here with higher time frame breakout, very clear breakout, traveling towards the 550s, and looks set for continuation higher, along with the fact, obviously, the indexes look in a pretty good position as it currently stands. The other area that has been incredibly strong is uranium. Uranium breaking out of its consolidation cluster here, pushing into fresh highs, and you know, a lovely simple bullish setup for uranium through this region, and uranium stocks as well acting in a very similar fashion. So some mixtures in the markets depending on what you're playing. If you're playing into crypto, I'd recommend just looking for active trades instead of being a spot buyer. I think overall we go lower on BTC. It's just what that sell-off looks like. That's really the only point of thought for me right now, and to have more information to be able to see what that looks like. I think you can trade actively on some of the alt markets. I don't think this is the time for spot buys. I think the traditional market looks really interesting at this point in time as well. I still think the indexes will make a fresh push here. I think the NASDAQ will get above 17,000. But there are some weaker areas that we can look at exploiting within that. Uranium, very strong. Metals had a decent end to the week as well. So lots of opportunity in the market depending on where you're looking and where you're trading. But simply from a crypto side, I think the focus is very much on a trading environment and not a spot buying environment. Still expecting lower across the board.